Hey there guys, how's it going? My name is Chris Chillingworth. Welcome to this video. This is the first in a series of videos I'm going to be doing every month to give an insight into my personal portfolio, my investing portfolio of UK stocks. And I felt it probably would add some value to share this sort of information. I've been sharing it with my members, my clients for quite some time. And I feel like it would add value to the wider world. And so I've got a number of new clients that have come on board who I feel having an insight into somebody else's portfolio can help. It can help bridge that gap between not knowing anything and having an idea about how things are going to work. It can allay fears of losing your money. We're in the middle of a bear market right now, down 30%. And, so it can alleviate concerns, because if you can do all right in the bear market like that, then you're going to be okay anytime pretty much. So I feel like it can add some value. And so I thought I'll do one of these, see how it's received. If people like it, then please let me know. Please give the video a like. Please subscribe and share, even share the video if you think it's of value to anyone you know. And leave a comment. Let me know if there's any questions you have, or if there's anything that's not quite clear, or if you just want to say hi, just leave a comment. That'd be awesome, and I'll get back to you guys. I always respond to my comments on the videos. So let's dive in. Let's take a look. So this is for June 2022. Now, quickly before I do that, actually, I just want to kind of explain. So basically, in 2019, I decided I wanted to start a journey where I was starting from £4,000 and I wanted to turn that into £1 million trading stocks on the stock market. 100% expect it to be achievable. I've projected everything. I have used very conservative projections to achieve that. It's going to take me until 2042. So we're looking at a 20-year process, or when I started it was a 23-year process. Now only 20 years left. I'm on course to achieve what I want to achieve, and I want to bring people along for the journey. I think this will be quite a useful way of documenting what we're doing along the way and showing people what is achievable with long-term investing, because a lot of people go to short-term trading because they want quicker profits, and they find they end up losing money. They lose more than they make. Whereas with long-term investing, really anyone can do this if you've got the patience and you know what stocks to buy. And if you can nail the analysis and the research, which is what I specialize in, then you just need the patience at that point. You just need to be able to wait 20 years before you start looking to cash in. So let's take a look and see how things are going anyway. So June 2022 was a tough month. We've seen quite a drop off. The portfolio, the fund, my portfolio has fallen by value of £1,315, which represents about 5.6% drop in the value of the fund over the course of just June. So it was a relatively heavy drop. But it's indicative of what we've seen across the market. And if any of you are investing out there, I suspect many of us had a bad June in terms of results. As you get to know my approach, you'll find that actually none of that really bothers me. I'm not particularly interested in scores and profit and loss each month, but I report it anyway, just because there are people interested out there. And it also helps people who perhaps feel like investing can be really lonely. You know, you're literally on your own at home generally. If you're a bloke, your missus is not interested whatsoever in anything you've got to say. She just wants to know if you're making money or not. That's it. And likewise, if you're a female and you're an investor, probably your other half isn't particularly interested either. It's quite a lonely experience, and you can be quite isolated with it. So to know that, that if you lost this month, that other people lost as well, it kind of it takes the weight off a little bit, I would hope. But yeah, we lost £1,315 out of the fund. It was about 5.6%. So that's that. And then the next panel there shows us the deposits made for the month. So part of my trajectory to get to 1 million, it's actually £1,024,867. That's the target by 2042. That's what we're aiming for. To achieve that target, I've got to be putting in a deposit of about £3,000 a year. And that helps to provide capital to continue to buy every month. That's something that I do. Some investors wait until they've predicted the bottom of the market, and certainly in times like these when there's a bear market, they'll try and predict the bottom and they'll get it wrong. Most people do. They'll generally, they'll buy too early or they'll buy too late, usually too late. They usually want to see the markets going back up before they jump back in. I don't worry about any of that. I don't have to try and make any predictions. I just buy every month. Every single month I buy more, and people think, well, the prices are going down. Why would you buy right now? Well, because to me, I've got a list of stocks that I've identified as stocks I would like to own. There's 54 out of 957. So the vast majority of FTSE stocks I want nothing to do with. There are 54 out there that I would love to own, and I've put them into a watch list, which I share with my clients. And of those 54, currently only 18 are priced at a level that makes sense to buy at. So there's actually only 18 stocks out of 957 that I'm interested in buying right now. And I buy more stocks every single month. Out of those 18, I'm buying constantly every month. I'm buying all the way down and I'm buying all the way back up again because, if you've got a stock that's £20 and it's fallen down to 15 on the way down and it might go down to 10, let's say, well, buying at 15 on the way down is the same as buying at 15 on the way back up. So, to me, it makes no difference. If I buy some at 15 and I buy more at 14, buy more at 12, buy more at 10, and then it starts to go back up again, and then all these investors jump in starting to buy at 12 and 14 and 15. Well, yeah, I could have bought on the way down, I could have bought on the way up, and it makes no difference. It's exactly the same price. And so I don't focus on when, I don't focus on timing, I focus on, is this price a good value based on the business, based on the stock? Am I getting a good return, basically? And that's how I work. And so every month I'm pumping money into my account because it gives me capital, free liquid cash to be able to make purchases every month. And I'm looking to put in £3,000 a year. That also helps boost my trajectory to that million that I'm looking for. And it works out about 250 a month is what we need to be putting in. So we're doing all right. And then we've got stocks sold in the next panel. So this is two positions that I had that came to a market value of £538. I sold them out. These are two positions that I bought really early on in my journey. I wasn't particularly that bothered about the stock. The price was overpriced right now, so I wasn't going to be adding any more to that particular holding. And there was an opportunity come up with another company that we are following that the price was at a level that made really good sense, and I wanted to buy some because this is a company I've been watching for ever since I did my analysis on them, but they've been overpriced until recently. That price came down and I wanted to make a purchase, but I didn't have the available capital to do so. So what I've done is I sold out two positions that I wasn't particularly that interested in for £538. You'll see in the final panel on the far right the dividend income of £132. So that's what came in this month on the portfolio. We had a dividend income of 132. So basically, with the stocks sold of 538 plus the deposit that I made of £225 into the account, which wasn't enough on its own to be buying any stocks. So I needed to kind of build that up with selling some stocks and plus the dividend income that came in, which we reinvest back into buying more shares to help again grow the portfolio. I made a purchase of £1,039 on two positions that I wanted to have in my portfolio. One of them was adding more shares. I actually doubled my position in one company, and another one was buying a brand new company that I'd not owned before, that I've been watching for 3 years, waiting for the right opportunity, and jumped in. So that's what that top row is all about, essentially. And then down the bottom here on the bottom left, you've got year-to-date deposits made. So again, that's just how many deposits, what I've pumped into the portfolio in 2022, basically. And again, like I say, we're looking at £3,000 a year. So it's June now, so we're on course to achieve that, if not better, which is great. And then the next one is year-to-date investment return. So we're down £7,704 this year, which sounds like a lot of money. And, to some people that is a lot of money. And it's represents 27% loss so far for me this year, which again sounds awful. But it's only awful if you were looking to sell all your assets and cash in on your entire portfolio in June 2022. Well, that's not my position. I'm looking to get to 2042 and then cash in. So all that matters to me is that the value of my portfolio only matters to me in June or in December 2042. That's all I care about. So this is kind of the equivalent of, or looking at this year-to-date investment return is essentially the equivalent of, judging the result of a football match after only 5 minutes of play. It's just illogical. It doesn't make any sense. And so, I've got another 20 years of holding these shares. They're going to be worth so much more than they are today in 20 years' time. So really, what they're worth today really doesn't matter. It has very little impact on me. And I almost don't even bother reporting on it, because all it does is it only has a negative value to it. There's no benefit to looking at that. All it can do is scare people, but I report on it anyway, because again, sometimes it's useful for some people to see where other people are at. They might be looking at their portfolio and they're down 25% and they're panicking. Well, they don't need to be. If they've got a 20-year outlook, then they shouldn't even really care, because this is not indicative of where they're going to be in 20 years' time, right? But yeah, and also, I went through the 2020 crash with this same portfolio, and we were down nearly 40% back then. The whole portfolio was down nearly 40%, and then it climbed back up, and we surpassed the pre-crash highs and went higher and higher and higher, and I was up $8,000 at one point in the entire portfolio, and now we're down again. So it's just the way the market works. I'm holding my microphone, by the way, so if you hear any microphone noises, I apologize for that. I'll try not to move it too much. Then we've got year-to-date dividends. So that is the dividend income that we received across the year so far in the first 6 months. Again, we're looking for about £630 this year, 2.5% of what we started the year with. And we're sitting at just shy of 400. So we're on course to achieve that. Dividends do not come consistently. So you're not going to receive 130 quid every single month. Some months you'll receive nothing. Other months you'll have a big bumper dividend. Other months it will just be in the middle. And so it's not consistent. So we can't guarantee that we're going to be making, the 630 that we're looking for, but we're on course to achieve that. So hopefully we will. In the next panel, you've got the 1 million trajectory goal value. So basically, you'll see from a table that I'm going to show you in a moment, but I have literally projected what I need to achieve and reverse engineered everything. And by the end of this year, I need to be on £19,169 to be on target to achieve my £1,024,867 target by 2042. And as you can see from the final column, or the final panel, sorry, the overall fund value as of the end of June was 22,353. So we're ahead of schedule. We're doing great, and that is indicative of certainly not this year, because we were well ahead. We're up at like 27,000, we're up at 29,000 at one point last year, and it's come crashing down this year. But to still be ahead of that trajectory, despite the fact that the market has tanked and we're down 27%, to still be ahead shows just how well we've been doing leading up to 2022. And it shows the opportunity now to get into the markets as well, because now is a great time to get started. This is a portfolio breakdown as of June 2022. Now, what I've done is I've omitted the stock names. I may have mentioned that at the beginning, I'm not sure. But essentially, I'm not going to be sharing the exact companies because I provide that for my clients. And so it will completely devalue that if I was just to give it all away on YouTube. So I'm not going to be doing that, but I still feel this adds massive value. You can see exactly anybody starting out, anybody who's getting involved in investing can see just what it's, the kind of typical results you can expect to kind of achieve. Now, this is June 2022, so you've got the number of shares down there on the left. You've got the different stocks. I've got 54 stocks on my watch list that I like. I don't own all 54 because they're not all priced right. Some of them I've been following since I found them, and they've never been at a price that makes sense, so I've never bought them. And until they do fall into that price bracket, I won't own them. And they may never fall into that price bracket, in which case I'll be following them for 20 odd years and never ending up buying them. And that's just the way it is, because I'm not prepared to overpay for a stock. Just like I wouldn't overpay for an investment or any other asset. So that is the situation. And then as you can see, you've got the cost value. So that is how much the share costs, or the shares cost. The market value as of last month, the gain or loss on those particular shares, and based on monetary value and percentage. And as you can see right at the bottom, we pumped in £23,994.52 into these shares. they're now only worth £22,325.58. So we've actually made a loss overall of £1,668. So just to make sure no one's confused here, the year-to-date investment return, we are down £7,704. So that's just 2022, the first 6 months of 2022. But overall, since we've started, we're down £1,668. And that is because we were up about £8,000 in profit until this year kicked off, and then everything just went to pot. And it's, again, I'm really not, doesn't bother me in any way, because this is just a snapshot of the first 5 minutes of a football game. It does not, is not indicative of what the final result is going to be in 20 years time, when all of these stocks are way worth more, and I've been buying more over those 20 years. You know, the whole face of this is going to look very different. But yeah, that's where we're at. So we're down about 7% overall, but we were up, I believe, what was it? I think we hit 30% at one point. We were up 30% overall on the entire portfolio at one point. It might have even been better than that, but we were up about £8,000, and we were certainly hitting on the 30 grand market value at one point for the portfolio. It has come crashing down by 7 grand or 7,700 so far this year, but you know, I expect it to fully recover over the next few years. This is the table that shows the trajectory to 1 million. So this is how I'm going to get to 1 million. So as you can see, in 2020, the starting balance of £4,000. That's where we started off from. Then the next column, you've got your deposit. So every year we're pumping £3,000 into this account to help build it, to help it grow, to help give enough liquid cash available in the account to be able to buy more every single month, right? Then you got your subtotal, which is the starting balance plus the deposits you're pumping in. So we're working off the back of achieving a 15% annual average return. So obviously every single year we're not going to get 15%. That's not what I'm saying. But essentially what this does is this maps out, if we were able to achieve 15% annual average return, how long would it take us to get to 1 million? And then the target is obviously to achieve that. And an annual average return. So not necessarily 15% every year, but when you average it out, it works out at 15% or more, and that's what we've been achieving so far. Then you've got your kind of pre-balance. Then on top of that is the dividend yield. So I don't pick stocks based on dividends. So the dividend yield is quite low. So I focus on stocks that are going to grow in terms of share price and grow in terms of their underlying value. The dividends that they pay out is a kind of a nice to have. It's not the focus. It's like a byproduct of what we're doing. But we will receive a dividend, and it just happens to be quite low. This isn't a dividend investing approach. So you're only getting, we're anticipating receiving about 2.5% a year, and that's essentially what we've been seeing. If you look at 2022, we're looking at, you know, we need to achieve £467, and we're doing really well on that. So we should probably hit that. And then end balance, by the end of the year, we need to be on £19,169.32. And if we continue to do that, and we continue to put in £3,000 a year, if we continue to achieve a 15% return, annual average return over those 20 years, if we continue to get a 2.5% dividend yield, we'll make 1 million by 2042. And so I've been plotting that as a trajectory on my chart, and then plotting the actual progress of my portfolio against that, and that's what this next chart shows. So the blue line is essentially the trajectory to reach 1 million eventually, and it only goes up to 2024 right now, because otherwise that chart would just look insane. But that blue line there you see is the trajectory of where I need to be, or where my account needs to be able to get to 1 million. And you can see we've been well ahead of that. We've been smashing it up until 2022. The end of 2021, from about summer 21, it got a bit choppy, and it slowed down a bit. The growth slowed down, and then in 2022, we've just seen it drop off, and it's been dropping off quite considerably. But as you can see, we're still above the blue line. And if we were below the blue line, we would be underachieving. We would be behind schedule in terms of where we need to be in terms of portfolio size and value to reach that million by 2042. We're still well ahead of it right now. Now, if the market continues to fall, we could find ourselves getting closer and closer to that blue line. We could even maybe fall below it. I honestly don't know what's going to happen. But what this shows is that from the start of 2019, from the end of 2019, I should probably say. Hand picking the stocks has proven to be far better. We've been achieving far better than 15% annual average return. So yeah, it's going pretty well. And that's essentially all I really wanted to show you guys, is just to give you an insight into how things are going. If you enjoy the video, then please let me know. Please leave a like, please leave a comment, please say hi, that would be awesome. Just so I know people are watching and got some value from it. And if there are people that enjoy it and it gets some likes and it gets some comments and people are enjoying it, then I'll continue to do this. And every single month you can watch as I report on the portfolio's progress, and I could do 12 of these a year over 20 years. I could be doing 240 episodes of this, and by the end of it, we should have £1 million. So if you want to come along for that journey, then leave us a like and leave us a comment, say hi, and I'll do some more of these. Thanks for watching, guys. Hope it's been useful and it's added value, and I'll see you guys soon. Cheers.